Welcome to today's market report.
Wall Street reeled back on Tuesday from a sell-off, and the yields on other safe havens, including US Treasuries, bounced back from new lows, even as investors worried about the impact of a resurgence in COVID-19, spurred by the Delta variant. Wall Street's main indices rose in early trading, with the Dow recovering from its worst day in 9 months. Yields on US 10-year Treasuries rose off a new 5-month low, reversing a 10 basis point drop from the previous session, the biggest since February. The narrative from yesterday that bled through the weekend was a little bit of a risk-off scenario around increasing COVID cases, according to Allianz Investment Management. I don't think it's so much that investors are worried about the cases themselves. It's government officials and their reaction, where we could get into a situation where restrictive measures get put in place again. That dampens growth over the long run. We continue to see strong earnings, and that helping the equity market. On the bond side, we see things move a little too far, too fast, but we see that reversing now. The Dow Jones Industrial Average rose 1.51%, S&P 500 rose 1.29%, and Nasdaq added 1.16%. After their worst sell-off this year on Monday, Europe's Stoxx 600 added 0.2%, down from highs earlier in the session due to positive corporate earnings and production updates from miners. MSCI's gauge of stocks across the globe gained 0.75%. Riskier assets globally have come under pressure recently as many countries struggle to contain the outbreak of the fast-spreading Delta variant, raising fears that further lockdowns and other restrictions could upend the worldwide economic recovery. A senior aide to U.S. House of Representatives Speaker Nancy Pelosi tested positive for COVID-19, Pelosi aide Drew Hamill said on Tuesday. In a separate gauge of investor risk appetite, Bitcoin fell below $30,000 for the first time since 22nd of June. In a sign of lingering fears of the spread of the Delta variant, the Aussie dollar Swiss franc cross, a favorite proxy in currency markets for economic recovery bets, fell to its lowest level since December 2020 at 0.6714 francs, according to Refinitiv data. The US dollar rose to 3-month peak on Tuesday as investors continued to flee to safety in the face of anxiety about more contagious Delta variant. Germany's 10-year yield, the benchmark for the Eurozone, briefly fell to minus 0.427%, reaching a new lowest since February. Oil prices turned positive after falling more than $1 earlier in the session due to the continuous worry about future demand and after an OPEC Plus agreement to increase supply. US crude recently rose 0.42% to $66.70 per barrel. Brent was at $68.98 per barrel, up 0.5% on the day. The gold spot dropped 0.2% to $1,808.61 per ounce. On the FX front, the GBP-USD pair dropped to 5.5-month low on Tuesday, with bears now awaiting sustained break below the 136 round-fig mark. The pair prolonged its recent downward trajectory from levels just above the 139 mark and witnessed some follow-through selling for the fourth consecutive session on Tuesday. This also marked the sixth day of a negative move in the previous 6 days and was sponsored by a combination of factors. The British pound was weighed down by Brexit woes amid reports that the UK will threaten this week to deviate from the Northern Ireland protocol of the Brexit deal. Sources indicated that the UK chief Brexit negotiator David Frost is set to unveil the government's proposed changes to the protocol. Adding to this, a surge in infections in the UK caused largely by the highly contagious Delta variant of the coronavirus acted as a headwind for the sterling. In fact, the UK reported 39,950 new COVID-19 cases, which, along with a modest US dollar strength, exerted pressure on the GBP-USD pair. Investors remain worried about the potential economic fallout from fresh COVID-19 outbreaks. This was seen as a key factor that continued underpinning the safe haven greenback, which got an additional boost from a goodish rebound in the US Treasury bond yields from multi-month lows. Euro-dollar remains under pressure at 3-month low near 117.50, whilst the dollar index was up 0.12% at 93.013.
This is today's market news. Thanks for listening. We'll see you next time.